Medici family, means that there is a need of trust, and in one way or the other, either the market or somebody has to provide this kind of trust. Very clearly the pendulum is now swinging from, let's say, a pure market approach to the desire to have a stronger and stronger state and regulation. Now, however, let's also be pragmatic and say that the risk is huge that the pendulum just swings too much in the other direction, the opposite. And here I think, while it's always wise to remember a number of aspects that are clearly showing how much a state-driven banking industry can be an even bigger disaster of what we have been seeing up to now. For instance, even by looking at the events of the last few months, if one looks at the state-owned versus the private-owned industry in Europe, you don't see a better performance of the state-owned industry. Just by looking at what happened with the Landesbank in Germany, that were providing cheap money to German corporates, they were losing money on that business. In order to cope for that, they had been creating some of the biggest portfolios of so-called toxic assets. Personally, I hate the word toxic assets because it's putting everything in the same melting pot. In reality, there are excellent things that are called toxic assets. In a sense, a lot of financing is provided to citizens, corporates, and so on through so-called toxic assets. So I think we have to be careful in using the concept. But I think that in Spain we've seen some of the smallest cajas that seems to be now in quite of trouble for some of the attitude they take towards real estate financing. And let's not forget that the first crisis generated by mortgage-backed securities actually impacted back in the 80s the Savings and Loan Association in the States. That was, for certain instances, there's a déjà vu concept with that. From the Italian perspective, I can't forget to mention the disaster that the southern state-owned banks made in the past and the amount of money it costed to taxpayers, the rescue of those banks. Also, if I look at the last few years and I look at, for instance, Central Eastern Europe, while now that is a very hot debate, we shouldn't forget that the amount of, the quality and the speed through which Central Eastern European corporates and retail customers received a level of service and a level of liquidity comparable to what was available in the Western world in a really short matter of years is, in my view, first of all, a tremendous success of a market mechanism. So, also to add on this standpoint, let's also highlight that in some of the state interventions happening in these very weeks, you can already see some potential problems of level playing field. I make a concrete example. We are seeing one of the Landesbank who received tons of money in the recent times to rescue by the German state, that the day after, and that agreed in Germany to a certain type of salary cap, the day after they have been making offers to managers of other banks in other countries that are absolutely skyrocketing and against any kind of let's say logic, especially based on the current debate about management compensation and so on. Or let me also say that as a competitor I'm looking with attention to the type of state support that is given to ING, where I can see that the business model of ING Direct, aiming at gathering money at very high rates, and then employing a lot of this money into Alt-A or, let's say, US subprime assets, is a business model on which I have some doubts on the long-term sustainability. What is happening nowadays is that money has been quick to arrive from a state, and that business model is continuing. So, state intervention is a medicine that probably needs to be taken, but also has to be taken in the proper way, should be possibly temporary. Once again, in the awareness that can also lead to disasters much worse than the one that we have been currently seeing. So clearly in this context, we would tend to speak more of re-regulation than of more regulation, in a sense that there are regulations that needs to be changed. Clearly they have failed in the recent times, and I don't think that we can just go ahead as anything has happened, as anything had not happened, as well as that some of the government intervention in banks that might be necessary in certain instances should really come with the desire and the plan to take a very temporary type of approach, aiming at allowing commercial banking and banking to run again in a overwhelmingly private and market frame, probably with some significant adjustment in the overall regulation. Thanks very much again.
Thank you very much for these concise, to-the-point remarks. I now move to a final introductory speaker, Daniel Gross, Director of CEPS.
Thank you very much. It's a pleasure to speak after two bankers who belong to those institutions which, after all, haven't really abandoned the traditional business model of banking, which is to take deposits and make actually loans, and not just engage in this activity which is called investment banking, which until recently seemed to be like an ATM, like a machine to make money from nothing. But of course, if you have an industry in crisis, then everybody goes a bit down, or down rather now, with the tide. But let's take a step backwards. If we are honest and look at the situation right now, I think we must have to admit that markets have failed. And they have failed on a big scale. Financial markets have failed, that's quite clear. But also I think the markets for corporate control have failed. Alan Greenspan, who was one of the proponents of the bubble, now says, I would never have imagined that those in charge of large institutions would be so stupid as to engage in all this risk. But it happened. Now, why did it happen? What was the nature of the market failure? Was it just that bankers were greedy, as is very often alleged? I think that's completely besides the point. Everybody is greedy. Greed is what drives our economy. That drives not only our bankers, but our entrepreneurs in general. So I think that is not really the problem. And we have seen that even in state-owned institutions as the German Landesbanken, as was already said beforehand, there was also some greed there. So that was not the problem. I think the fundamental problem was actually nothing new. It was a well-known phenomenon, which is that in financial markets you have periods of euphoria followed by manic depression. That has happened in the past all over again very many times. And the big question is maybe only, why did this bubble last so long? Why was it so strong? Why was it so global? I think that's the really question we should ask us. And the reply is actually that that's what everybody said. We have a new era. We have globalization. China and India coming to the market. Eastern Europe being freed and becoming more competitive. We have inflation targeting central banks. They have dominated inflation, and price stability is here to stay forever. We economists participated. We said there's an era new which is called the Great Moderation. Business cycles have not been abolished, but have been greatly dampened. Everything is nice as far as the eye can see. And the eye sees very often what it wants to see. If it has rosy glasses, then the future looks very nice. And that basically, it's not a new phenomenon, but it happens from time to time. The problem was there was nobody around to say, stop, it probably won't go on forever. Traditionally, that was the task of the central banks, but I must say they singularly failed on this account and on both sides of the Atlantic. The ECB as the Federal Reserve. They basically assumed things could go on forever, and they were happy to let things go on. Perhaps Greenspan was a bit more excessive. He said, it's very nice, actually, it's a new era of productivity. Subprime lending allows people to buy homes, which they could otherwise do, whereas the ECB was grumbling, but letting things go on. And I think that should be one of the key lessons we draw from this crisis. It's not so much about greedy bankers or more detailed regulation. It's that we have to have somebody who says, stop, halt, and maybe says it too often. But I think we have now learned that it's better to interrupt a party too early than too late.